Come on in, everybody. Welcome. Welcome to the Winning Momentum podcast. I'm your host, Scott Sinclair. Thank you for joining me. I think we're going to have some fun today. We're going to try to have a little bit of fun today. Hey, for all of you listeners who have been texting me, emailing me, sending me messages on the comments, say, hey, Scott, where have you been? You've missed a couple of weeks in the last 4 to 5 weeks. Yes, it is true, but I'm fine. I'm fine. Thank you for reaching out. Thank you for your concern. In all seriousness, we've had a number of family issues we've had to attend to, and it's kept me very business. And also, I needed a little bit of time to grow this new goatee of mine. If you're on the podcast, you can't see it, but it's amazingly gray. I don't know how long this thing is going to last, but here we are. We're back, and I've hopefully we've settled down in our personal lives and at my house for a little while anyways, and we can get back into the routine. So since late October, have very much wanted to do a show talking about Twitter and the turnaround of Twitter by Elon Musk. It's fascinating, it's fun, and we can learn a lot of lessons from that. But then out of the blue comes along this crypto fiasco, FTX. Are you following that? I mean, if you're in my world, it's just the gift that keeps on giving. It's entertainment, it's shock value, it's a lot of things. But I don't know that we can really learn from it, but it's so tempting. It's so tempting to want to cover FTX rather than Twitter. Maybe we'll do both ultimately. And if you're not following this, FTX is a fraud. Billions and billions of dollars. It'll likely be bigger than Madoff, definitely bigger than Enron. And it's in the crypto world, but the fraud itself is not very complicated. The fraud is your plain vanilla greed, lies, Ponzi scheme. It's all of these things, but then it just keeps getting more and more interesting. There's a faux wokeness, a cultural, political wokeness attached to this thing, where the principles of FTX were trying to lay on their virtual signaling, their goodness, and people were buying it. And there's a bunch of celebrities involved in this. Kevin O'Leary, Mr. Wonderful, was a big supporter. They sold a bunch of these funds, or attracted investment. Maybe it's not technically a fund, attracted investment through celebrities, Tom Brady and his wife, Giselle, what's her name? There was a bunch of actors involved in this. Larry David, for one, comes to mind. And I think the whole lot of them are being sued now and will continue to be sued. There's a fascinating money laundering element to this FTX thing, where it's become very apparent that you have a war in Ukraine where the U.S. government is taking taxpayer money. The U.S. government, led by the Democrats, is taking taxpayer money and sending it off by the tens of billions of dollars to Ukraine. There's a fact. It's come out that it's also a fact that the the Ukraine government is storing some of that same money in crypto held by FTX, this now bankrupt trading company in crypto. And FTX, led by this very young 20-something woke founder, is the number one donator, number two behind George Soros, donator of funds to the Democrat Party. And as the Democrats would argue, to some Republicans, which is true, except it was like, 300,000 to Republicans and 40 million this cycle, I think, to Democrats. And the Republicans that did get some money were all anti-Trumpers. And there was a line item on the FTX balance sheet that's, has something to do about get rid of Trump. It was a line item on the balance sheet. And so, there's this appearance I don't know what's a fact. Nobody knows what's a fact yet. This is a brand new thing. This appearance of laundering funds to the Democrats, celebrities involved, fake wokeness to attract money. I mean, the whole thing's just fascinating, but I don't know that we can learn anything from it. And so rather than spend much time on that, we're going to talk today about the turnaround of Twitter, because Twitter has leadership lessons right now, basically because Elon Musk, who is the richest guy in the world, the richest person in the world that we know of, Elon would tell you, and has in interviews that I've seen, that he believes that Vladimir Putin is orders of magnitude more wealthy than he is. I'm certain that there's some people we don't know in Saudi Arabia that have a bunch of money hidden away that we don't know about. But in terms of the most open business people, Elon Musk is ranked the top in terms of wealth because of his business skills and leadership, engineering and persuasion, and just his business savvy in general. And he's bought Twitter, and he's turning it around. He's affecting change. He's changing culture, and he's doing it in the open for everyone to see and to follow along on Twitter. You can just get on Twitter, follow his account, and he's tweeting, tens and multiples of 10 times a day. And he's telling you what's in his head, what he's trying to do. He's literally negotiating on Twitter in front of you live. It's fascinating. And from that, because this is a podcast about affecting change, about turnarounds in business and organizations and in your life, we can learn a lot. We can learn a lot from what Elon has been up to. If you're on the video version of this, yes, this is a large glass of vodka that I'm drinking in front of you. It is late at night that I'm doing this, and I need to get the show out to you for the morning. I didn't want to miss another week. And I'm well into we're going back to the martinis with Scott days, back into the cocktail hour here, late in the evening, so we can get the show out for you. So we're going to do Twitter because we can learn some lessons, and it's been fun to follow along. Now, before we start down this path, I want to give some context on Twitter, some context on Elon Musk, and some context of Elon's acquisition of Twitter. Because for those of you in that world, and for those of you in my world of corporate transactions and valuations and investing and leadership and turnaround and affecting change, you're all over this story because it's great. But for those of you that are not necessarily in that world, that listen to this podcast for education, for better leadership skills in your business, to be a better entrepreneur, to affect change in your life, whatever it's for, you're not familiar with Twitter, I just want to give you some quick context. And also, many of us know Twitter is a social media platform, but we don't necessarily know it as a business. I didn't know it as a business until I looked at it today. So as you all know, or most of you know, Twitter is a social media platform, and the essence of it is that you get on Twitter and you say, hey, I want to broadcast to the world, to everybody that's following me, and to everybody that happens to pick up my tweet, which is basically like a text message limited to a number of characters, which has evolved over time. That's what Twitter is. And so you have a whole bunch of people who are tweeting things all day long, all night long, all over the world. And that's what the platform is. And it has become an important news, in particular, a news and conversation and free speech platform is the bottom line. And when Twitter first started years ago, I started using Twitter for my news. I would get up in the morning and I wouldn't look at the websites or read the newspapers. I would get the headlines off of Twitter. And I did that for years, but I never really tweeted. I never built a following. I think I have 80 followers or something, like just nothing. Because I've never used the platform for that, but I'm familiar with it because I actually used it to read a lot. And then when Twitter sort of started to go crazy during the Trump years, and I mean crazy in terms of the left side of the political spectrum and left side of the culture, which by the way, I'm not choosing sides here. I'm not suggesting that I'm on the right side of that spectrum. I absolutely am not. But the culture war on Twitter to me was just going too far, and I couldn't deal with it. I had to focus on my day-to-day business. So I hadn't been paying much attention to Twitter, and I rarely tweet, is the bottom line. But in the summer of 22, we all watched as Elon Musk started his takeover drama, which I believe started in April 2022, when he said he wanted to make a bid to buy all of Twitter. So, what was the business side of that argument that sort of broke loose in America, maybe all over the world, but certainly in America? There became a huge debate and argument on the business side of this about value. Specifically, his bid was going to be $44 billion, which was a decent premium to market at the time that he came up with the idea. But then shortly thereafter, the stock cratered, and then it seemed to be a grossly overpriced bid to buy the company, right? So that was the business debate. Is Elon Musk an idiot? He's not going to close the deal. He's going to pay the break fee and walk away, and he's going to get his ass sued, and he's going to lose all his money, right? That was the online debate and the debate in the news, certainly the news that I listened to. And then there was a second debate, perhaps a louder debate going on, which was the free speech versus content moderation debate, which some would call censorship. So free speech versus censorship or moderation. And that really came to a head. The frenzy came to a head when President Trump was booted off the platform in, I think, 2000. So Twitter just kicked a president with a huge following off the platform. And they continued on a regular basis to kick off anybody who had a right of center point of view, or who said anything about anything that Twitter people thought was contentious, right? And so I'm not asking you guys to, agree with that, by the way. I'm just, it's a fact that these people were kicked off, and it's a fact that no one on the left was kicked off. And so I'm not trying to take a position. I'm not saying that Twitter, I guess what I'm trying to say is I'm not trying to say that Twitter was justified or not justified for that. I definitely have an opinion, but it's not the point of this show. And I'm not trying to come here and pitch you on that opinion, one way or the other. But it's a fact. There was this huge debate brewing, which really boiled down to free speech versus content moderation. But what about the business itself? So we all know that about Twitter. But what about the business itself? I've heard that Twitter was a great, an absolutely terrific business with a great platform worth the $44 billion that Elon was going to pay for it. I've heard in the news that it was on the verge of bankruptcy, that it was going down any moment, and he's the savior of this company. So what is the truth? So I was able to dive into their last annual financial report, which was released in April 2022, which was around the time that Musk announced his bid. It was the earnings and report from 21. And what it showed was that revenue for the years 19, 20, and 21, respectively, was $3.4 billion, $3.7 billion, and $5 billion. So in 2021, Twitter did $5 billion in revenue, which was a decent growth from $3.7 billion the year before. The loss before tax, or let's put it this way, the earnings before tax in 2019 was $390 million. So they actually were profitable before tax to the tune of $390 million. But in 2020 was $51 million loss. And in 2021 was a $411 million loss. So definitely losing money and heading in the wrong direction. When you go from slightly positive to slightly negative to more negative in 3 successive years, that's not a good trend. And it is the sign of a troubled company. In fairness to Twitter, that $411 million loss in 2021 had some unusual items. So I think there was a litigation expense that was a one-time item of significance incurred during that year, but still the trend was going in the wrong direction. So there's a profile of just sort of the size of the company. The company was making, Twitter makes all of its revenue, or most of its revenue at the time, primarily through an advertising model. Had 7,500 employees at the time, 7,500 employees. And here's a key metric: 217 million daily average users, DAUs, they call them. So on average, every day, 217 million people from around the world were using Twitter. And that was, if you go back a number of years, that was a KPI, a key metric, a statistic that was, had a decent growth, not crazy growth, but a decent growth year over year. It was not an aberration. In other words, that the 217 million in 2021 looked like a reasonable number. That was more than it was in 2020 and 2019. And just as an aside, since we're talking about DAUs, daily average users, if you were to take $44 billion purchase price, which Musk paid for this business, and divided that by 217 million average daily users, you would come up with roughly $200 value per average daily average user. $200 per daily average user. In other words, you took $200 of value times your 217 million DAUs, you come up with more or less 44 billion. And I knew I could find that stat. It took me a while to try. Well, I actually did the math on that stat, but I knew I could verify that stat. But it was harder than I thought. But I found earlier today in my research, a couple of years prior to that, a research study where it showed that Twitter was at $281 value per DAU. And by comparison, for example, Facebook was at $311 per DAU. So this is, daily average user seems to be a metric that social media companies are valued by. And Twitter is no different. So the 44 billion purchase price, if you're basing that on 217 million users every day, seems a pretty reasonable multiple, right? And so what else? Took a look at the balance sheet. Surprisingly, it looked pretty good. They had 14 billion in assets. It included some intangible assets, which you never want to look at in financial analysis, but it wasn't a lot, so it was fine. About 7 billion in liabilities, and therefore 14 minus 7 is 7 billion in equity, which is a decent amount of equity, which means they raised a lot of money through share offerings because they didn't earn it. They were, they lose money. And so they've always been able to raise capital through equity offerings. And so they have $7 billion. So therefore, we think about all that, and we're trying to get context on Twitter. Was Twitter in imminent bankruptcy risk, as many suggested, as the news was telling me? Is it a turnaround at all? And the answer, I believe that it clearly not a bankruptcy risk. It seemed to me there's lots of liquidity, and that entire storyline is complete nonsense. And based on the liquidity and based on the equity available within the company. But if we look at Facebook by comparison, trailing 12 months right now, we said Twitter was 5 billion in revenue. Well, Facebook was 118 billion in revenue for the 12 months. So it's quite a bit bigger as a company, but it was making $28 billion in net income on 118 billion in revenue. So I haven't done the math on a calculator, but roughly 20% net income ratio to revenue. You make $1 in revenue, you make 20 cents in net income, which means that if Twitter were in an equal space on 5 billion in revenue, it ought to be making $1 billion in net income, and it's roughly $1 billion short of that $1 billion to be equivalent to Facebook. And so Twitter is definitely a underperforming company from an earnings perspective. I would go as far as to call it troubled. Definitely overvalued at 44 billion based on an earnings basis. Definitely in a chaotic situation given the fact that it was losing money, seemed to be bloated, and that these culture wars that I talked about before were going on. It just seemed to be a chaotic environment. And so why is that relevant? What's relevant is you have to think about I always try to explain to my staff, to clients, to bankers, that a troubled company, there's no definition of what a troubled company is. To me, there's always this continuum of trouble. And at the one side of that continuum would be, let's say the most extreme of that continuum would be a company that's about to go insolvent, which is why I was asking. I'm seeing news, mostly in the right-leaning press, is this company going bankrupt. Musk is the savior of that. Well, that's just not true. On the other side, you've got, or the least extreme of that continuum of a troubled company is you have a company that's more underperforming. It's making money, but its operating ratios are not as efficient as you would like them to be. And there's room for operational improvement. And then there's this whole gray area in between these two extremes. And why that's important is you need a different leader to deal with those different extremes. So, for example, I'm really good as a turnaround professional at the more extreme, more trouble, more mess, the greatest amount of shit going on. That's where I excel. I may not be as effective. I'm not useless, but I may not be as effective at the other extreme because it requires a much subtler approach and a lot more attention to detail. Well, this deal, Twitter, started off somewhere in the middle when Elon Musk bought it. He stepped into a situation that had relatively healthy equity. Now, I don't know how much he had to borrow to layer onto that, which may erode that equity. I don't know about that. But he stepped into this thing. What he was buying before he layered financing on it, if he did, was okay. It was a troubled company, but it wasn't a disaster. It was somewhere in the middle of that. But things turn south pretty quickly. So we'll get to that as we go forward. So there's the Twitter context. I think it's important to understand what the business is because it helps us understand the decisions that are being made and what's going on. Let's talk about Elon Musk quickly. We talked about Twitter. Who is the guy that's buying this? Who is this leader? Most of us have heard of Elon Musk. If you haven't heard of him, you just haven't been awake the last couple of years. He's the founder, CEO, and chief engineer of SpaceX, which is the company that's mission is to get to Mars. He builds his own rockets. You see launches. I'm pretty sure that Starlink is involved. He's tied into SpaceX, and this is the technology and satellite network over the earth to provide internet just basically to everybody outside of rural areas on the entire earth. It's just an amazing project. He's the angel investor, CEO, and product architect of Tesla Inc., which is the electric car company. He's in the top 10 most valuable companies in the world. Last I looked, it was seventh place, something like that. Huge. Founder of the Boring Company, which I don't know a lot about, but I believe to be a tunnel boring company where he's building tunnels underneath Vegas, for example. And the mission there, the idea is to take all surface transportation below the ground for efficiencies. And he's a co-founder of Neuralink and OpenAI. I know even less about this one. Neuralink, I understand, is they're literally creating chips to put into your brain, to implant into your brain. For numerous reasons, I think the starting on that would be to help those with mental handicap, mental disabilities. I don't really know. I haven't looked into it. I don't understand it, but another fascinating, world-changing venture. My Elon Musk, of course, he's the owner and CEO of Twitter now. Estimated net worth of around 181 billion as of right now, making him, as I said, the wealthiest known person in the world. He's also the past CEO of PayPal. I think you've all heard of PayPal as a technology company. I don't believe he was the founder of PayPal. I thought he was the founder of somebody that bought PayPal, perhaps, but he was definitely the CEO of PayPal and took it to fame. Collectively, all of these businesses that are driven by Elon Musk have quite easily a market capitalization in excess of $1 trillion. Over $1 trillion of market value combined. He's really an amazing leader. So one question that you I had that you might have with the CV that I just gave you is that Elon's clearly a tech guy, right? He's a high growth tech guy, not a turnaround guy. And what does this tell us about his ability to execute this turnaround at Twitter? So I've had many conversations again with my staff about the similarities between turnarounds and high growth situations. I'll let you know a secret at Sinclair Range. If we're working with a client, if this is not a company we've purchased or lent to, but if we're actually advising and consulting to a particular client, if it's high growth, in other words, a venture capital style deal, startup or early stage, and heading into a high growth situation, it's the exact same engagement letter, word for word, as our turnaround engagement letter. Why? Because it's the exact same work. It's the exact same work. Every high growth company is troubled. It's troubled by definition because it's chaotic. It's in disorder. They don't have the systems in place. It's not methodical. It is by definition a chaotic and therefore troubled situation. All turnarounds are high growth. Right. And on my first point, you can listen to any of the guests that we've had on this podcast. Most recently, I think, was Olga Jelani. But you can listen to the Rob Fraser episodes, all sorts of the entrepreneurs that we've had on here who have had success and high growth. And they'll all talk about the troubles they've had getting through those stages and trying to get their arms around this beast and to make sure that they don't go over the cliff. If I can mix as many metaphors as I possibly can into one sentence. And all turnarounds are high growth. Well, that's by definition, because if you don't have high growth, then you're not turning the company around. If you had a company that did 100, me as a turnaround advisor, you walked into a company that used to do, I don't know, whatever, make up a number, $100 million in revenue. And now it's in trouble in doing $60 million in revenue. And you get it back, or I get it back to make up a number, 80 million in revenue, 90 million in revenue, 100 million in revenue. Well, the fact is that company grew from 60 back to 100 or 80, 90, 100, whatever the number is. That's pretty decent growth. That's relatively high growth. But more importantly, the chaos is the same. The people running around, not sure what they're doing, not pulling in the same direction, systems not being in place is exactly the same between a troubled company and a high growth company. Success in business requires two basic things. One is a business case. We can all understand that you need to buy low and sell high, right? In the case of Twitter, you need to have more users and you need to monetize them in the old business case by selling them advertising, or in the new business case by converting this into a subscription model, which we will get to. So you need a business case, but you also need execution. You have to be able to execute. And most companies understand the idea of having a business case, but then they fall apart on execution, which is leadership, which is management, which is why I always say turnarounds almost 100% of the time come down to management, because we all know how to make up a business case. What we don't know how to do is lead and execute on that. And so, bottom line, on this point, to me, Elon's the richest guy in the world. He's had a huge track record of the most successful entrepreneur in history. He is the most successful entrepreneur in history. Has he specifically been involved in a turnaround before? No, not that I'm aware of. But turnarounds are high growth. I don't see that as an issue at all. And if we follow along with what he's doing with Twitter, what we're going to find is a bunch of gems in terms of leadership lessons, which is what we are trying to do. We talked about Twitter. We talked about Musk personally as a leader, as a businessman. Let's talk about the acquisition. I've covered this on the show before. October 27, 2022 was when the deal closed for $44 billion. But Elon started this process around April 2022. And I think he did so mostly with a tweet, of course, where he said, maybe I should buy Twitter. And he positioned himself as a free speech absolutist and that what was going on with Twitter was, unacceptable on a free speech basis around the world, and that somebody had to step in to fix that. And one thing led to another, and he announced his bid. And the price at the time, as I said, the $44 billion was based on market value, what the stock was trading at the time, plus a generous premium, I would say, as I recall it, and go back to remind myself, I've covered it in past episodes, but a generous premium on top of market value. And what he did, it appears from press reports and from some of the disclosures I read, is he did no real upfront due diligence. Due diligence is when you dig in to find out what is going on with the company before you are comfortable to make a bid. Rather, what he did was he said, hey, Twitter, you're a public company. You do all these public disclosures. I'm going to rely on those disclosures that you made in the public. If everything you said is true, I'm going to pay $44 billion to this company. But then what his deal said is, if it's not true, if what you said is not true, I can walk away from this deal really with no penalty to me. So that in essence is the transaction that they signed. But of course, you put yourself at risk when you do that, because you've already locked into this market price of $44 billion. You've told all the shareholders that that's what's going on. And then you have to prove that the disclosures of the company were inaccurate, knowingly inaccurate, and that changed the valuation, which is exactly what Elon tried to do. He tried to cancel the deal on the premise that the bots, now bots are automated programmed accounts, so like think robots, that's I think where the term comes from, although I'm no techie, but what if the 217 million daily average users are not in fact people? What if there's a bunch of automation in there, of fake accounts, fake followers, and they spit out, canned tweets or artificial intelligence tweets and troll people? Troll is a word that we use on social media for meaning like give people a hard time, try to trigger them, say bad things about them, something along those lines. And and so what if a significant portion or a healthy portion of those people on which you valued the sorry, I got to get rid of my Siri here, who's trying to dictate everything that I'm talking, on which you valued the business, what if they're not real? And that's exactly what Elon had said. He said that Twitter's public disclosures, don't hold me to the exact detail, but I think they said that their bots, their fake accounts, were running at about 5%. Maybe it was 4%, some number like that. And he said, no, it's way more than that. We're not getting information on this. The number's way higher than 4 or 5%. And I want to walk away from the deal, right? And so he said it's more. And he sent a notice terminating the transaction, and Twitter lawyers sued him, as you would expect out of that situation. And the whole public blew up. Everybody went nuts. They all said, Elon's going to get screwed. He's going to get sued. He's going to lose all his wealth. And the other side, again, this just breaking down political lines. And then was saying that the Twitter board are a bunch of fraudsters. They're pulling one over on the market. And that this is, Elon's going to kick their ass in litigation, basically. And on this show, what I said was just everybody chill. You can go back and listen to this if you care to. What I said was everybody chill out. There's really 2 points. One is Elon might be right. Maybe he's right to call bullshit on a 5% bot rate. And if he is right, maybe he can negotiate, and he could prove it, because you have to have the evidence, right, to succeed in court. Maybe there'll be a settlement and he could negotiate a lower price. Maybe he can get it from 44 billion to 40 billion or to 30 billion or some other number. And two, my second, and I think more important point, is there was no downside. There was literally no downside to that litigation to Elon Musk. That is the way to think about it. If he is able through the litigation disclosure process to get a bunch of information before the transaction, which was able to convince him in a court that the bots were more than 5% and therefore the value had changed, he could negotiate a better deal. If he was not able to get information that proved that, what was his worst case scenario? His worst case scenario is he had to pay and buy the company for the exact amount that he had already agreed to buy the company for, which was the $44 billion. There was no scenario where he was not going to get Twitter, and also he was going to have to pay $44 billion or some massive billion-dollar fee. That wasn't going to happen. It was two choices: do the deal or get a better deal. There was no downside. That's the thinking behind that type of litigation. And that's what I said on this show. And it's exactly what happened. What happened is there was fear of the bots by the market in general. And there was fear that the board of directors of Twitter had put themselves into a position where they were completely tied to Musk and they had nowhere else to go. And he called bullshit on their bots, on their disclosures, and the stock tanked. So the stock was dropping. But at the end of the day, clearly, Musk did not get all the information he needed to make a case. And so, like I said, he bought the company for the $44 billion, which is exactly what he was going to do anyways. So that was the acquisition. And just as an aside, it's come out post-acquisition that he was right, as I suggested. He was right on the bot counts, on the number of fake followers. Now, somebody's putting on Twitter, I don't know if if Twitter came up with this themselves, this calculator, or some third party has created this, fake follower count, but you're starting to see this on Twitter now. And what you're seeing is this measurement tool that the median on large accounts of fake followers is 32%. So 32% median of all followers on fakes accounts is, all followers on large accounts are fake. So there's a 32% fake account bot rate. Not 5%, 32%. By the way, if you take 32% of the 217 million daily average users at the time of acquisition, or at least in 2021, that's about 70 million bot accounts times, remember the $200 valuation per daily average user? Well, that was a $1.4 billion problem. That is what Musk was trying to get at with that litigation. But a $14 billion problem, not a $1.4 billion, $14 billion problem. So of course he would sue, and he had no downside. Okay. So there's the context of everything. Now you know what Twitter is, the business case, the valuation, who Elon Musk is as a leader and a success story. And we have all of that. Okay. And the acquisition and how we got to where we are. So he closes in late October and the fun begins. So let's go over the lessons. Let's go over the lessons that I want to draw upon so far. And again, you can just go onto his Twitter account, follow along, and you're just going to get an MBA every single day in 140 characters, more or less. It's absolutely fascinating and it's fun. Okay, lesson number one that I want to focus on. The way I'm going to do this, by the way, is I'm going to choose what we talk about on this show, what my content is about, and give you how I see that and what Elon is doing as a perfect example or a terrific example of what we've been trying to do and teach to affect change in your business or in your life. Okay, so number one is, if you want to create change, this is the lesson I'm seeing out of Twitter being verified from Musk, is if you want to affect change, you need a set of values. Okay, you need a measuring stick to measure your decisions against. How do you, in a chaotic organization, in a time of chaos, which we've already discussed, how do you make rapid decisions on part information and keep steering the ship, if I may, in the direction more or less that you want to go? And the answer is that you have to have an articulated and clear set of values. All right. So I've given you an example before. I bought a company, started a company, which is now called Equip Innovations. It's a tier 1, tier 2 automotive supplier in Quebec, Canada. And I bought a business out of bankruptcy, moved into this new company, Equip, and renamed the whole thing Equip. But it was a bankrupt business. We have the same building, the same machinery, a lot of the same people, although we've doubled the employees since then. And it needs, like all turnarounds, it needed a culture change, which takes a long time. And we've been hit with everything that could possibly go wrong in the first year of that operations, but we've survived and we're going forward, and here we are. But one of the things that we talk about all the time at that company is our 4 values. And to be blunt about it, the 4 values that I set forward were the opposite of what the guys were doing when they drove the company bankrupt, right? So this was, and everybody knows it. And so this was really a signal to the employees and stakeholders, internal and external, that we're going to change. And the 4 values I set forth were teamwork. The whole name Equip was an employee contest to name a company. And Equip is a play on the French word for team, which is équipe, spelt differently, but it's a play on that. So teamwork, openness, which sort of breaks down into honesty and integrity, perfect deliveries, and perfect quality. Those were the 4 values. And we talk about that very often at Equip. And as we say, these are measuring sticks with which we make decisions. I don't expect that we're going to have perfect deliveries. God knows we don't yet. I don't expect that we're going to have perfect quality. We certainly don't yet. But when we make decisions, when we're trying to affect change, now we know what direction we're going in. If you don't have the values, you don't know what direction you're going to go in. Now, with respect to Twitter and Elon, as far as I know, has not sat down on Twitter and tweeted out, here's my list of things of values, okay? But he sort of has piecemeal, and I've put together what I believe to be the important ones. And number one that I've noted, and these come in no particular order because he has not presented a comprehensive list himself, as I said, but number one seems to be add value to advertisers, advertising being his main revenue source when he bought the company, and he wanted to add values to them. Why would he have to add more value to these customers? Well, think about it. If 32%, was that the mean number? If 32% of the followers are fake, what are you selling to advertisers? Are they paying for 100% of the accounts that see them, or are they paying for the bots as well? So they're only getting 70% of the views for, like, how does that work? Right. And so it's adding a more honest product, a more valuable product to his customer. So his customer thinking seems to be a clear value, breaking down into feeding the bots and the trolls, as he said from day one, is job number one. At one point, I think he tweeted something about, he's gonna kill the bots or die trying. And also more inclusivity and free speech, okay, on the platform, rather than alienating of half the country, but also while moderating content at the same time. All right. So building a safe, more inclusive platform that's safer for advertisers and that is bot free. So you're getting value for money as an advertiser. So that seems to be a clear value and a value. And as Musk tweeted, new Twitter policy is freedom of speech, but not freedom of reach. Negative hate tweets will be max deboosted and demonetized. So no ads or other revenue to Twitter based on these negative or hate tweets. You won't find the tweet unless you specifically seek it out, which is no different from the rest of the internet. So he's looking to have free speech. People can express themselves. If someone wants to find that, in this case, negative or hateful tweet, they're able to do that. It hasn't been knocked off the platform, but Twitter won't be trying to make money off of that, and advertisers don't have to worry about it. That's what he's trying to say here, okay? So there was a value, adding value. There was a value of his, which is adding more value to advertisers, defeating the bots. Another value he stated repeatedly is to becoming really an engineering-based company, going back to basics and focusing on engineering as opposed to the bloated organization that Twitter had become. It seems to me an unstated value that he's open sourcing ideas and improvements to the platform. He's literally, by going out on his tweet thread, going out and saying, hey, we're thinking about this with Twitter. We're thinking about that for Twitter. He's doing polls. What do you think if I do this? What do you think if I do that? Going out to millions of people and getting their feedback and really open sourcing the engineering corrections required on the platform. He had one user tweeted him, it's because Twitter has, when talking about the poor ad performance, says it's because Twitter has the worst ad platform of any social media company. It's targeting an ad return on investment is so terrible that it's virtually a black hole. You only have running fluff ads on Twitter, aka no return on investment ads that they can turn off. Fix this and you'll get all that money back. To which Elon Musk tweets back, agreed and working on it. He's gone out, expressed the problem to the market in general. The market, in this case, an ad, clearly a sophisticated ad person, has come back and said, well, your platform doesn't work for ads. And he says, yeah, I agree, and I'm going to fix that. He's open sourced this whole turnaround, which seems to me to be a consistent value that he turns to in this turnaround process. And again, you use these values as measuring sticks to affect change, because otherwise you don't know where you're trying to go. Okay. Clearly a value that he's used in changing culture is he wants to be, let's use the cliche, lean and mean, a work ethic. He wants the employees to have a greater work ethic, show up at the office, be hardcore, as he said in his own words, and we'll get more to that later, and to cut the bloat so that this company is profitable. So I'm just going to categorize that one as lean and mean. And here's another important value, which leads to his persuasion abilities, is not boring. And he has said this many, many times. You know, the worst thing, it seems to me, he says that it seems to me the worst thing that you could do, according to Elon Musk, is to be boring. Everything he does is entertaining and interesting. I'll give you an example. He had to, Trump, as I said, President Trump had been booted off the platform. Well, easy enough. Musk buys the platform. He now owns Twitter. He's the boss. He can put President Trump back on the platform and just turn him back on, and his millions and millions of followers. Is that what he did? It is not what he did. What he did was he held a poll on Twitter. Should I reinstate Trump or not reinstate Trump? He didn't tell us 51% Trump gets reinstated. He didn't tell us 20% Trump gets reinstated. He didn't tell us anything. He just held a poll. He got free attention. He got everybody engaged in this discussion. He got over 15 million votes. He was getting 1 million votes an hour at one point on this poll. And the left of the political spectrum, the anti-Trump people, again, I'm not taking a position on which side I'm on. They were just going crazy, absolutely crazy. And at the end, he reinstated Trump, as I think we all knew he was going to do regardless. But the poll made it fun and exciting and not boring. And by the way, when he reinstated Trump, did he say thanks and come back on Twitter? He did not. He said, nah, I'm good. I got my own Truth Social over here. I don't need to come back. So he didn't. And now what does Musk say? Oh, come on, you need to come back. This is about free speech. Come on. No, he's not doing that. Or does he say, fuck you, Trump, you can't come? He doesn't do any of that. What he's doing is sending out funny memes. I mean, really funny memes. You know, for example, of some beautiful woman standing over here and then it says, you know, Twitter. And then it's got Trump standing over here and it says Trump, and he's got his eyes looking over at the beautiful girl, you know, temptation. And so and he has a whole series of those going out, just making it super interesting. As Elon tweeted, Twitter is simply the most interesting place on the internet. That's why you're reading this tweet right now. If you want to change things, if you want to affect change in your life, if you want to affect change in your business, you have to have goalposts. All right. Because what you're doing, you're not making the right decisions all the time. You're trying shit out. What we were doing isn't working. We have to admit that. We need to change. What do we need to change to? Well, let's try this. How do we know if that's working or not working? The only way to know that is to have a goalpost, is to have something to measure it by. Let's try that. Is that getting us closer, in the case of Equip, to perfect deliveries? Is it improving our deliveries? Is it improving our quality? Are we being open and honest? Do we have integrity? Are we working as a team, right? Is this thing that we're doing, this change that we made, working vis-a-vis those measuring sticks? Those are values in a turnaround. If you don't have them, you're just shooting blind. And so I think the commentary, the actions of Elon Musk since the acquisition 3-4 weeks ago have displayed a healthy set of values with which to measure, which he can measure his decisions and his success. All right, next point. I've said repeatedly in turnarounds and affecting change that you need to define your own success. You need to ignore the other's definition of success. Their negativity is not yours. Nobody knows what you're thinking. Nobody knows what the plan is. Even if there's a stated plan, they still don't know what the plan is. And 100% for sure, they're going to be critical and they're going to be negative because it's a risky situation. And you set yourself up to be the leader of that situation where people, by definition, are going to get hurt. Stakeholders aren't going to get paid, not in the case of Twitter, but in the case of most turnarounds, employees are going to be terminated. A lot of that going on at Twitter. People are going to be unhappy and they're going to criticize. That is a fact. Okay. That is a fact. And you need to define your own success. Okay. You need to be sure about where you're going, why you're going there, so that you are able to ignore this negativity. And you just see so many times turnarounds where the leadership gets dragged into the demands of this stakeholder, dragged into the demands of that stakeholder. And as you want to, as the first point that we talked about illustrated, one of the values was listening to the stakeholder, was listening to the customer, listening to the advertiser. That's all good. But then you have to make your decision within the concept of how you define your own success. Okay. In a public company, in a startup, where you're going to go from here to there, exit to a VC, you made $1 billion, your buddy made $2 billion. Well, you lost, right? You know, that person made more than you. It's easy to measure financially what that success is, but in a turnaround is totally different. It's totally different because you have scarcity. You don't have abundance. So that's, and I've told you stories on this show about that before, about my experience in mining companies and drilling companies during economic downturns. And just every single turnaround, every turnaround that I've ever done for 30 years, which has been hundreds of turnarounds, you just have to listen to and acknowledge the criticism of people who have no idea what your plan is and what you're trying to do, and they don't care. It's not like you wouldn't tell them. They don't care. They have their own definition of success and it's different from yours. And so you just need to know where you're going and you need to move on. You know, at the beginning of this, Twitter, it's interesting that, how would a corporate raider or a activist investor go about buying a public company like Twitter normally? Would they buy 100% of the shares or the good bulk of the shares and take the company private? No, they wouldn't. Not normally. I mean, you could. It has happened, but it's not the norm. The norm is to get a hold of a control block, which means a certain portion of shares that are sufficient in quantity to allow you to vote a change in the board of directors. Maybe not an outright change, but maybe you get yourself a seat at the board. There's varying degrees of this, of course. But maybe for $1 billion or two, I'm just making that number up, but maybe for $1 billion, $2 billion worth of Twitter stock, Musk could have had a seat at the table and could have tried to influence Twitter from that position. He didn't have to spend $44 billion. And as I recall, Twitter offered him that. They offered him a minority position. They offered for him to get a significant block when he first bought the 9% or whatever he bought when he first announced he was going to do a bid for Twitter. And I think it was up to 15% he was allowed to buy under that deal that was offered to him, as I recall. And he could have a board seat and he could influence change from that position. And he said no. And what he said publicly was, this company has to go private. I have to buy the whole company and take it private because it needs to change. There needs to be drastic change at Twitter, and you can't do that in a public environment. You have to do it privately. Why? Why can't you do it in a public environment? Well, because of this very reason. Because everybody has their own agenda. Everybody is looking out for themselves, properly so. They may not agree with where you're going. There's going to be pain. There's going to be risk. By definition, if you're troubled, there is scarcity. There's not enough for everybody. And you can't accomplish that in a public company. And so he was right. And I thought to myself at the time, that's really smart. That's what I thought. I think he's right. It's expensive, but really smart. But I underestimated how smart it was. I underestimated how political Twitter had become on the left, going out of their minds about disinformation, anti-Trump, deplatforming conservative commentators, deplatforming conservative comedians. Just crazy, in my opinion, on that. But also on the right, crazy, out of their minds on censorship. And confusing censorship with content moderation. Whether you like the content moderation or not, that may not be the same as censorship. They can be commingled. They can run over each other, but way over the top on this issue, in my mind. Complaining about their leaders being kicked off, which was not an across-the-board thing, although it was significant. Anybody that talked about COVID or Trump or conservative values or anything are going to get booted off. Like, the conservatives just went out of their mind on this thing. And so everything was just political, and it still is, and hypersensitive. And since in the US, everything is driven by this cultural political divide these days, I think in retrospect, he was even more right than I gave him credit for. Everybody has their own agenda. You have to define your own success and what you're trying to accomplish, because there's scarcity. And if you can't do that, you can't fight through the negativity and all of the hate coming at you. And there will be hate. It's a fact. If you put yourself out there 100% of the time, they're going to come at you. And as Musk said in one of his tweets, he said, being attacked by both right and left simultaneously is a good sign. He clearly understood and understands that the right place to be is with everybody hitting you a little bit. That means you're sort of down the middle. And that's what he has chosen. And he's judging as a measuring stick, as I've said before, the amount of hate that he's getting from the various sides. I think he said early on, if you're only being hated by the left, well, he's gone too far right. And if you're only being hated by the right, he's gone too far left. Lots of hate coming at Elon. One of his other tweets I liked was that the same people that said the tech guy could never survive in the auto world when he was creating Tesla are now the same people that are saying the auto guy can't succeed in the tech world, can't succeed in social media. He understands and embraces the negativity. He fights through it, and good on him for that. All right. Next lesson that we can observe here. I've always talked to you, my formula for making more money in any business. In other words, where should you focus first? Number one, contribution margin, which is your revenue, your price per unit minus your price per unit minus your variable cost, which is up your contribution, and your contribution divided by revenues, contribution margin. So basically a margin though, okay, on variable costs. Increase that first of all, because your bottom line is highly sensitive to smaller increases in margin. You make a little bit more per dollar that you sell, you're going to do better off. Second, cut your overhead. Third, increase your revenue. And by revenue, I mean sales. Increase your sales of units, or in the case of a Twitter, advertising, or number of users. Okay, a metric that you can metrify, that you can monetize. That's the word I'm looking for. A metric that you can monetize. And so, one of the first things that Musk did post-purchase was he tweeted out that he was losing advertisers due to worry of hateful, due to worry of by the advertisers of hateful content coming back, the platform, going sideways, the advertisers being harassed by activists. And Musk tweeted out, Twitter has had a massive drop in revenue due to activist groups pressuring advertisers, even though nothing has changed with content moderation, and we did everything we could to appease the activists. And I estimated, he didn't tell us how much his revenue was dropping, but I estimated about 30% based on other disclosures. I'll touch base on that in a minute here. But let's just say that you bought this company and things were going okay from a P&L perspective. He was losing money, but from his perspective, not a ton of money. He could cut out some stuff and things would be okay. And then the minute you get in the door, your revenue model starts blowing up right before your very eyes. He's down a huge percentage, which increases your loss dramatically. What do you do about that? Do you drop your prices, for example? Did you go to the advertisers and say, hey, I'll give you a deal? I'll take less money for your ads right now. Is that a way to do it? Well, if you want to increase your margin, which should be job number one to make more money, that would be the opposite of what you should do. What you should be doing in this case is you should be looking for ways to generate more money to get more margin out of your same asset base. In this case, your asset base being your daily average users. So Musk comes up with the $8 for a blue check mark, an $8 subscription per month. Now, a blue check mark, for those of you that are not on Twitter, has historically been, if you had a little blue check mark by your name, it was a status, basically a status symbol. Okay, it sort of meant you're verified, that you're a real person, but what it really was a status symbol. And he disclosed in some tweets that, the famous people and the high-end business executives, the news people that had these blue check marks were competing for them, and in fact were privately bribing Twitter employees as much as $15,000 just to get a blue check mark by their name. It was a big deal for these people to have a blue check mark. And then Musk comes along and says, well, we're just going to offer that to everybody on a subscription basis for $8 a month. I, your humble host of this podcast, have about, as I said, 80 followers because I've never really used Twitter. I went out and got myself an $8 a month blue check mark. And I think it's people like me who are not regular Twitter users, who haven't been around long, who nobody knows, that pisses off the famous people who saw it as a status symbol before. But what Musk did was he created a revenue stream out of nothing. He increased his margin based on the assets that he had, which was the users. Before it was advertising. Advertising's dropping off the face of the earth. He creates this $8 subscription model, and people start buying the $8 a month. When he first, and knowing that it was going to piss off his other stakeholders, being the users, the heavy users, and the famous people. So, for example, when he first floated the idea, the other part about not being boring is he's just negotiating this live. We first said, well, it's going to be $20 a month for a subscription. Then he had a tweet from novelist Stephen King, our famous novelist, heavy Twitter user, lots of followers, who tweeted $20 per month to keep my blue check. Fuck that. They should pay me. If that gets instituted, I'm gone like Enron. Now, Stephen King is a very famous author who's written a lot of books. So far be it from me to point out that there was 4 grammatical errors in 4 sentences. I'm not sure what that was all about, or that he compared himself to Enron, the 3rd largest fraud in the history of the world. And there's certainly a large part of the population that thinks Stephen King is a fraud. So that was just a weird comment. But that's just me. From Elon's perspective, it's an important customer, right? A big user on the platform, pushing back on proposed revenue model. So Stephen King says $20 per month to keep my blue check mark. Fuck that. Elon responds, how about $8? He just has an open negotiation on Twitter with the tweets. Here's the thing. In turn, you can always raise your prices. Every troubled company I've ever gone into is like, we can't raise our prices. We're just hanging on to this revenue. We're not making deliveries. We can't do that. And it's all just going to fall apart. A turnaround executive, a lot of them, a majority of them, I'm not necessarily one of them, by the way, will tell you the first thing you do when you walk into a troubled company is you raise your prices. That's exactly what Elon did. He created a new subscription revenue stream based on the assets that he had. He raised the price from $0 to $8. I have no idea how many people signed up and what that's going to do, but that was exactly, to me, the right move on his part, and is an illustration of this idea of increasing your margins right away to make more money. And as an aside, because everything he does seems to have multiple benefits to it, all those big moves anyways, not only has he increased his margins, increased his revenue, increased his prices, the $8 per user as a subscription is a huge tool, probably the biggest tool in defeating the bots. Remember that as a value? We need to defeat the bots. That adds credibility to the platform, adds credibility to the like in the product that we're offering advertisers. In the end, I think what's going to happen here is if you don't buy the subscription, you're not going to have much of a platform. You're either going to get kicked off Twitter or you're just going to be buried. And only the people that pay the subscription are ever going to be seen by anybody. The bots, of course, are not going to be able to pay the $8 because they're just an automated piece of software. This subscription kills off the bots, kills two birds with one stone from, at least from Elon's perspective. It adds to one of his values of killing off the bots, one of his main goals. I will kill the bots or die trying, and it raises more revenue. Great move. Great move by Elon on that. Second idea second part of the formula of making more money in any business is reducing your overhead, reducing your costs. Okay. Well, what are the costs of a social media platform like Twitter? At the end of the day, it boils down to people and real estate. Those are your primary costs, people and real estate. The line items on the income statement includes things like cost of revenue, R&D, sales and marketing, general administrative. Okay, but in each one of those categories, I promise you, although it's not disclosed, is going to be a whole lot of people and some real estate. That's what's going to be in those line items. Sales and marketing in 2021 was $1.2 billion. I'll remind you, the company only lost $400 million in that year. $1.2 billion expense went to sales and marketing, whereas Elon Musk is a one-man marketing machine with no marketing departments in any of his other companies. Did you know that? Did you know that Tesla has no marketing? That any of his other companies have no marketing? It's just Elon on Twitter. That's the marketing department. Theoretically, all things being equal at Twitter, he could have stepped in there. He could have wiped out $1.2 billion in sales and marketing. That's a hyperbole exaggeration. Of course, I don't know if there's third-party sales or stuff in there, but wiped out $1.2 billion on that line item, more or less, which means that he would have been profitable for $800 million sort of right away. Of course, that's not what happened because the revenue dropped off the face of the earth. But the concept here that he demonstrates is that you need to reduce costs. So he walked in day one. He walked in literally with a porcelain sink under his arms, like a bathroom sink, and he carries it into the lobby of Twitter, and so we can get a picture. And the meme on the internet is, I'm here, let that sink in. And then promptly terminated 50% of the staff. I mean, right away. He got rid of half of Twitter. So that's about 3,500 people, more or less. I think there was, what did I say? There was 7,500 people when he bought the company. So more than 3,500 people because, clearly the company was bloated, and clearly he didn't need people in certain areas. Like he got rid of, marketing. He didn't tell us what he got rid of, other than key executives. He got rid of all the key executives, in-house counsel, replaced all of them. But we also assume he got rid of a lot in content moderation, marketing, administrative, and sort of just drag this down towards that value, that core value that we talked about of being an engineering-based company, investing in engineering, not investing in these other areas. Everybody went crazy, as you can imagine. Here's this evil guy coming in, wiping out 50% of the workforce. He's not going to pay them severance, which is not true. He paid them double, apparently, what the legal severance was required. That he's letting people off before Christmas, which is always a bogus argument. But he was doing that. And by the way, for context, Amazon around the same period of time laid off 10,000 people. Every tech company, every social media platform is laying off tons of people right now. There's a recession coming, folks. I hope you're ready for it. And so Twitter was just one in a bunch. But he did lay off terminate 50% of the people right away. And then a couple of weeks later, which I think was just last week, he came out with a midnight email memo to all employees and stating the new policy, which was basically you have to come back to the office. You can't just work from home for the rest of your life. You have to come back for the office, and you have to have a hardcore, that was his word, hardcore work ethic. Only extremely productive will be acceptable, something along those lines. You can't be average and work at Twitter. And then he said, if you don't accept that, just say so. You can click here, yes or no. If you click yes, I accept these terms, I'll come to the office, I'll work hardcore. We'll see you at the office. And if you click no, that's cool. You're terminated and you'll get your 3-month severance. So he sends out this email. And of course, there's an employee revolt based on this. And there's articles and Business Insider and Inc. Magazine and Harvard Review about you can't manage people and bully people this way. And he lost about another 1,500 people. We don't have hard numbers on this. Some people said everybody left and Twitter was going to shut down. It was going to go to 50 employees. I think the most current estimate, which I actually heard today, was that in total, the company's down to about 2,500 people. Started at 7,500, 5,000 are gone, down to 2,500, about a third of where it used to be. And, everybody's freaking out. The company can't run on that skeleton staff, so on and so forth. For context, by the WhatsApp, the messaging app of Facebook, I don't have a hard number on how many people run that entire app, which is significant, but it's less than 100 people. When they sold to Facebook, there was 55 people there, and they sold it for $19 billion. 55 people, not 2,500, not 7,500. There was 55 people. Now, it's not apples to apples, right? But it's not far off. It's not far off. And so the market goes nuts. Twitter can't stay afloat. I stayed up all night last week following through these tweets. And, everybody predicted that even sane people were predicting that the platform's going to shut down by morning. Of course, nothing like that happened. I laughed at CBS News saying they were pausing. They were pausing their tweeting to evaluate the risk of the platform. And then the very next day they tweeted, right? People can't stay away. People come back. In fact, the daily average users have gone up dramatically since Musk bought the platform. It's really amazing. So why did he cut so much in cost? Why was that necessary? Why is that a good move in the context of making more money and hitting the values? Well, Musk tweeted, regarding Twitter's reduction in force, unfortunately, there is no choice when the company is losing over $4 million per day. Everyone exited was offered 3 months of severance, which is 50% more than legally required. $4 million a day is what it was losing, which is not what the company was losing when he bought it. The difference being the drop in advertising revenue, which is where I came up with my off-the-cuff estimate that he lost about 30, maybe more, 30% of revenue from advertisers cutting backs. So cut back in staff reductions, cuts back the cost. Remember, social media, this type of company is people in real estate. But it's more than just making more money. The turnarounds are very much about changing culture. To affect change, you have to change culture. You need to change the motivation of people. You need to change the way that people think. You gotta change. It's all about change, affecting change, getting people to change. And there always comes a time where you need to change the people that don't want to change. You do your best to influence them. You do your best to give them some rope to try to come along, but always in a situation when change is required, there's people that don't want to change. You need to change the people that don't want to change, okay? And this is what I loved about Elon's, even though it was drastic, but just hitting this right over the head. He just said to them in an email, here's what I expect from you. You got to show up to the office and you have to have a hardcore work ethic. Yes, no. Hit the button. Literally, just hit the button. That simple. And you get rid of the people that are going to be resistant to your cultural change. All right. Conclusions. We've gone on too long here, perhaps. Will this work? Will the turnaround work? What have we learned so far? If you want to affect change in your business, high growth, troubled, if you want to affect change in your life, you got to know, you got to pick your goalposts, your values, your measuring sticks, because it's all about testing stuff. It's all about, I'm going to try something different and see if that's better. Well, what does better mean? If you don't know what better means, how do you measure it? You're just a lost soul. You're lost in the middle of a forest. It's dark. It's dusky. It's not really dark. You can kind of see. You have no idea which way to go. What do? Do you just stand there frozen, or do you pick a direction? This is my direction. I'm going to go that way. I'm going to see if it works for me because I'm just trying to get home. You go that way. That's not working. Change. Come back to center. Change your direction. Okay, I'm going to try over this way now. All right. You need to know where you're trying to go. And then you need to try different things and see if it moves you in that direction. If you don't have those values, if you haven't stated them, if they're not clear, your turnaround is never going to work. Okay. You need to own your purpose and your definition of success. You are in a turnaround or in a high growth situation because there's never enough capital. There's never enough time. In a chaotic environment, you are in an environment of scarcity. In an environment of scarcity, people are going to be pissed off. It's going to be high risk from your personal perspective as a leader. They're going to have different agendas. You need to find a way to get through all of that. And the way to do that is define your own success. Don't let other people tell you what the turnaround is. Don't let other people tell you where you're trying to go. Don't let other people get you off track from doing what you're trying to do. You want to make more money? Increase your margins, increase your contribution margin specifically. I've done a ton of episodes on this. In this case, Twitter increased prices on a subscription basis from $0 to $8. Cut costs, cut your overhead costs, while at the same time changing your culture. Will it work? Will it work? Turnarounds are risky. Who knows what's going to work? I don't know. Let's stay tuned. It's high risk. It's a lot of work. But I'll tell you this. He's the most successful entrepreneur in the history of mankind. Hard to bet against him. The DAUs, the daily average users, appear to be growing all the time since he got a hold of this thing at an accelerated rate. My money is on yes, he's going to be a great success. At the end of the day, I've talked about this idea of testing everything, having a clear direction where you want to go. Let's try this, see if we get there. Oh, that didn't work. Let's try this, see if we're going to get there. Oh, that didn't work. The more money you have available, the more you can try different stuff out. The worst case scenario is you have no money and you can't afford to try these things out to move in the direction that you want to do. Well, he's got plenty of cash available, right? And so that helps and lessens the risk of a turnaround. And he even tweeted, I haven't taken the quote here, but he even tweeted at one point, Twitter's going to do lots of boneheaded things over the next few months. At the early stages of this, we're going to keep the things that work and we're going to get rid of the things that don't. He flat out told told us that in a tweet. That's exactly right. I think he's going to be a success. I've been way too long on this Monday evening. I want to thank you for listening. If you survived all of this, I hope we got some value out of this. That we took some lessons, and we'll cut this up and put it into smaller chunks for people as well. I had fun. I enjoyed researching this today. I've learned a lot. I'm a big fan of this guy, and so that probably came through. Thank you very much for listening. This has been the Winning Momentum Podcast with me, your host, Scott Sinclair. We are on YouTube, Spotify, everywhere you listen to podcasts. Check us out and go to thescottsinclair.com for lots of content. Thank you. Take care. See you next week.